Good morning. My name is Bernardo del Rio, Managing Director of J. Del Rio, a multilingual accounting firm specializing in helping companies do business in Latin America. It's a pleasure to welcome you to our webinar, Doing Business in Colombia. I would also like to introduce Mr. Alejandro Marin, a tax manager from our Colombia office, who will explain the business environment in that country. Before we begin, we would like to thank all participants and remind you that this presentation is a very summarized explanation. We will leave out a lot of interesting information. Think of this as Colombia 101. Since this is an overview of doing business in Colombia, if you have a specific question, please feel free to contact us so we can answer it. Let's get going. Okay, looking at the agenda, part 1 will be when to establish a formal presence. Part 2, corporate taxes in Colombia. 3, management of the value-added tax. Part 4, labor aspects, and lastly, banks and exchange control rules. But before we get into the nitty-gritty, we wanted to discuss kind of why Colombia. You have very interesting foreign direct investment proportion and a high potential for growth, combined with low inflation rates. It's an open economy. It's a member of the Pacific Alliance. Remember that the Pacific Alliance is Chile, Mexico, Peru, and Colombia, which are basically all the pro-trade countries in Latin America, with Costa Rica looking to join said alliance. So it's going to get better and better. And a lot of these, as the name indicates, Pacific Alliance, a lot of it is looking east towards trade with Asia. Now we have easy access to global markets. We have a strategic location in Colombia, more than 850 international direct flights per week. It's a focal point of maritime activity. It's close to the Panama Canal. And all of these really combine to locate Colombia as a central point for logistics for South America. Now, talking about, just to give you a rough estimate of the size, and this is based on 2017, we have the largest economy in Latin America is Brazil, with GDP of around 2.1 trillion. Next is Mexico with almost $1 trillion. Then is Argentina, and fourth is Colombia. And the difference between Colombia and a bit Argentina is the stability between both economies. Colombia, we're talking about inflation rates of 4 to 6%, and Argentina, you're looking at close to 40. So there is quite a difference. And Venezuela, we can just skip Venezuela. Going to the next slide. This is just a general overview of foreign direct investment flow from Pacific Alliance countries. So you can see the tendency of, if you take a look at Colombia, 8 billion, 6.4, 14, 15, 16, 16. And this is just up to 2014. And so you do see a very large flow of foreign direct investment, especially into oil sectors, manufacturing, and others. This is more basically for your information, just a bit of handy information from The Economist, the GDP increase, consumer price increase, inflation rate, etc. Now, Colombia is the 4th largest economy in Latin America. Bogota, which is obviously the capital of the country, the GDP alone is bigger than the GDP of Ecuador, Uruguay, Paraguay, and Bolivia, according to the International Monetary Fund. Now, one of the goal of Colombia, and it's pretty aggressive, and they mention it here, is to become number 3, and that's the director of investment in Bogota. And to do that, it would require replacing Mexico City or Santiago. Like Miami is considered number 1 to do business in America. An interesting point, for example, Cisco bought 2 floors in the Tierra Firma Tower in 2015. So you are seeing a lot of tech companies. There is an interesting tech sector with startups that are doing quite a lot of interest there in startups. Now, the U.S.-Colombia Free Trade Agreement went into force May 2012. Colombia does have or is negotiating free trade agreements with more than a dozen countries, and it also includes 23 investment agreements and more than 40 countries and 16 agreements to prevent double taxations, which are in force or being negotiated. Now, in 2010, and this is a while ago, but in 2010, foreign companies invested just under $4 billion into Colombia's non-energy and mining sectors. By the end of 2015, it rose to $15 billion, excluding $20 billion from energy and mining investment. And in the first quarter of 2016, some $4.3 billion in foreign direct investment flowed into Colombia, up 159% versus the same period last year, according to ProColombia. Okay, now before we start with the first part, we would appreciate it if you could help us out by answering the following question. What was your main reason for attending the webinar? Please take a few seconds to let us know how you learned about today's session. Okay, we've now finished the survey. Thank you for having taken the time to answer this brief question. So getting started with when to establish a formal presence. Here, Alex, feel free to jump in at any time when I say something off script or I shouldn't, okay?
Sure, sure.
Doing business before incorporation, and this is similar with many countries. There is when you're first just dipping your toe in the pool of doing business in another country, and you're talking about, well, we render a service, and the presence is in compliance with the tax treaty in question, so I don't have a presence. You do promotion of the product or other preliminary activities. When you're talking about direct import of the product, let's say from the USA or any other country to the final customer, if the final customer is the importer of record and all you're doing is exporting from Mexico, from Spain, from UK, from the US, then you really don't have a tax presence yourself. Now, the important thing to note with all of this webinar, as always, is that, and especially anything related to if a tax presence is established in a certain country, is there's no substitute for professional and specific advice. So these are all generalities, but if you have a specific case, we're more than glad to talk to you. Establishing a formal presence. Commonly, many foreign companies tend to carry out their business through distributors or agents. However, some, like having more of a presence could trigger the need to actually establishing a Colombian subsidiary or a branch. And one of the options is if you establish a commercial establishment, an office, a warehouse, that can be a trigger. So if I have a fixed place of business, that can be a trigger to being necessary to set up formally in Colombia. Participating as a contractor in the execution of work or provision of services. And we'll talk about that a bit further on. Carrying out activities related to the extraction industry. So anything oil, mining, if we're talking, and we'll get into that a bit more, but the fact that you have more of a presence, that would require you to set up a subsidiary. Many times, for example, it's obtaining or participating in a government concession. So the local government won't want to deal many times with a foreign company. They would rather deal, and there are some exceptions with the oil or mining industry where they actually prefer to deal with a foreign branch, but a formally registered branch in Colombia. And again, here, Alex, I think the most important thing would you say is looking at the tax treaty of each country?
Yes. Well, first of all, good morning, everybody. Yes, when you have employees or contractors in Colombia, we should consider the tax effects and also the immigration rules. I think it's the most important, and the activities that such individuals are performing on behalf of your company, just to be in compliance with local rules.
And employees or contractors, one issue that we tend to see, Alex, and let me know if you run into that as well, is if the foreign company sends an employee, sends a contractor, has a sales agent based in Colombia, that can create a labor relationship with a Colombian individual and the foreign entity and a tax presence. Would you say that's the case?
Well, yes. I will say that it depends on the activities that such employees carrying out on behalf of the foreign entity. I mean, each situation must be analyzed. We have a definition for PE, permanent establishment, in our local tax code, but also we have some DTAs in force. So our definition is quite similar to the OECD definition. In some cases, you will have a presence, a tax presence, and labor effects. But again, it's really important to assess each facts, particular facts in each situation.
And one of the notes that we have here is also that one effect is the company effect. So if a company sends down a person to Colombia, there could or could not be a tax presence issue for the company, but there's also the tax situation of the individual that we're talking about as an expat.
That's right. From 6 months in average, you will have a tax resident in Colombia as an individual, 180 every 3 days. So it's really important to keep this in mind. Sometimes individuals travel to Colombia and stay more than that, and they actually don't know that some tax effects will trigger here.
Sure, and they would be paying on worldwide income.
Yes, as far as they are tax residents under the tax law, Colombian tax law, they will be worldwide income tax payers. Okay,
and those type of issues are sometimes missed, and they can create issues for the employee relocating. Now, one of the things, and I think we'll go to the next slide. Alex, do you want to give kind of the overview of the different types of company?
Sure. Well, we in Colombia have several types of legal vehicles. Through a foreign investment, investor can incorporate formally. However, we're going to focus or point out the most common vehicles that a foreign investor use, according with our experience. The other, are more used for familiarity or for other kind of structures. First of all, we have the SAS. It's like a simplified entity. This is really common and quite new type of legal entity. It can be incorporated by private act. It means that it's not require a public deed from one shareholder to several shareholders. There is no minimum, as we're gonna see in the following two. No maximum. The contribution, the capital, can be paid within the following 2 years, and also important, liability, it's limited to the amount of capital contributions. Many companies has transformed the legal form to these kind of entities. Later we have the SA. This is quite similar to the first one, to the SAS, to simplify, but it requires at least five shareholders. We have some differences as well in the contribution. The 50% of the authorized capital must be signed during the incorporation, and 1/3 of the signed capital must be paid just at the setup moment, and the remaining balance of the capital signed must be paid within the following year. So now we have some difference between this first entity. In terms of responsibility, liabilities are also limited to the amount of capital. And here there is an important thing. These kind of entities must have a statutory auditor, and we will explain in the next slide what this statutory auditor is about. The limited entity from 2 to 25 partners. Another difference that we want to point out is that the contributions must be paid entirely in the incorporation, during the incorporation, and also each additional or increment of the capital must be paid 100%. Their responsibility, we have also some differences, except for labor and tax liabilities. Their responsibility is limited to the amount of the contributions. So here are some important facts to keep in mind. And finally, a branch, which is basically a branch. It's for the responsibility purposes. Main office and the branch are the same entity. This kind of structure or vehicle must be incorporated by public deed, allows to the main office to carry out permanent activities in Colombia, and also must have a statutory auditor from the beginning of the entities.
Yeah. And I think, Alex, one thing to note is that it's very important when deciding what type of company that we do this in conjunction with your lawyers, so that all the pertinent legal issues are addressed. And one of the things that I would want to mention, for example, is the SA, which would be more of a corp type of vehicle and incorporated, is a per se corporation according to the IRS. So that is listed as a per se corporation, so you couldn't check the box according to the US tax rules for any US based investors. I would tend to think that the SAS could comply as an option to check the box, as it could be like with just the one shareholder. You could consider it as a disregarded entity, but we would need to discuss that with your US tax counsel. Now, going to the next slide, Alex, can you tell us a bit more about the statutory auditor?
Yeah, sure. Well, this is basically an audit body. It's named by the shareholders or partners, and this is in compliance with local regulation. Local regulation states which entities are obliged to have this kind of auditor. Mainly, the auditor review the financials. Its work is based on the generally accepted audit standards. Also review and evaluate components or elements of the internal control. Importantly, is an independent agent, as any auditor must be. And also important, those entities that are obliged to have auditor, I mean, its tax returns must be signed by the auditor and the legal representative. Otherwise, no legal effects will trigger such returns. So this is very important. And lastly, there are the limits on some companies. From the previous slide, we saw that only the SA and the branch must have a statutory auditor from the beginning. But later, when another kind of legal entity breaches some limits, also have to name an auditor. And here are the gross income, the gross revenues from the previous year is over 3,000 monthly minimum legal wage, which are around $700,000 US, and or their assets exceeds 5,000 monthly minimum legal wage, which are 1.2 million US.
And Alex, those levels are fairly low. Like the threshold is fairly low in order to be obligated to have basically a statutory auditor. I think we could summarize it as a tax auditor, and that's the focus.
Yes, also many companies name the same external auditor for corporate purposes. Just use the same and add some other functions like the tax auditor. Yes.
Sure, and we had that function in Mexico, and currently it's only an option and really an option to get benefits, but for much higher level of a threshold. Okay, so can we go to the corporate overview?
And for accounting,
sure.
Yes, fiscal frameworks. Well, for financial, we follow IFRS, International Financial Reporting. This is quite new. And for tax purposes, at least in the corporate income tax, we follow as well. We take with our starting point is the IFRS, and we add or detract some adjustment which are on the tax code. Okay, the part 2 is corporate taxes in Colombia. General overview, and we split this to give a general overview. At the beginning, well, you must care about some tax registry, which are mandatory here, enables to the tax office through this way the tax office know that you are here, you have a tax presence, and you are allowed to carry out additional steps as follows. The RUT is the National Tax Registry. This is before the National Tax Authority, and there you deposit or you fill your information, legal representative, auditor if you have to, shareholders, tax responsibilities, among others. And the subnational, there are many subnational tax registries, and you need to sign up as many as jurisdiction you are carrying out activities in Colombia. And also you send information regarding the company, and through this way the tax offices know that you are here, you have a tax presence, and you are allowed to carry out additional steps as follows. The RUT is the National Tax Registry. This is before the National Tax Authority, and there you deposit or you fill your information, legal representative, auditor if you have to, shareholders, tax responsibilities, among others. And the subnational, there are many subnational tax registries, and you need to sign up as many as jurisdiction you are carrying out activities in Colombia. And also you send information regarding the company, and well, the legal representative, among others. In the National Tax Registry, usually is complete during the incorporation process, because even if you need a public deed or a private act, you must register those before the Chamber of Commerce, and the Chamber of Commerce later will remit you to the tax office to get the tax ID. When you get the tax ID, you complete the incorporation before the Chamber of Commerce. And so the National Tax Registry in most of the cases you get during the incorporation process with the advice of your legal counsel. Meanwhile, the Subnational Tax Registry is necessary to ask after this process. Once you get this, we really recommend to get the electronic signature. This is requested before the National Tax Authority and allows you to carry out some web process, some process before the tax office through the website. And also it will allow you to sign tax returns. And finally, care about for requesting the invoicing resolution that allows you before the National Tax Authority, also that allows you to issue invoice according with at least tax rules. In the day-to-day obligations, we split this we're gonna name the main taxes for a corporation. We have national and subnational. National, the corporate income tax, the value added tax. We have a scheme of withholding taxes at source. Financial transaction tax is important for corporations as well, and consumption tax. From the subnational point of view, we have industry and trade tax and property tax. This is the most the common taxes that the corporation face.
Okay. And Alex, when you say subnational, you're talking like about provinces or states?
That's right. That's right. We have the national office, but also we have some subnational tax offices that state a tax code, and they create some additional taxes for their jurisdiction. So they are really jealous about where the income is taxed, because this is a source of revenue for this government, for the subnational or government.
Okay, that seems to never change. Before we go to the next slide, I just wanted to mention to all of you, on the right-hand side of your presentation, there is a part where you can start submitting your questions for the Q&A session. So if you want to be sending all those questions, feel free, and when we get to the Q&A session, we'll touch on them.
Okay, so from the corporate income tax, well, it's not different. What I would like to point out here, our fiscal year is from January 1st to December 31st. During the setup year, it's from the setup date to the 31st of December. And in liquidation year is from the 1st of January to the liquidation date. The tax basis, we have an alternative to systems. The first one is the ordinary income, revenues, less cost and deductible expenses. And also we have a minimum tax basis, which is named or known as a presumptive income. This is obligatory method, and it's determined by applying the 3.5% to the initial equity of the taxable year. And when you get this presumptive income, or you compare it to the ordinary income, and you pay taxes over the higher of the both. So in some situations, you're going to have tax losses, and you're still going to have to pay income tax under the presumptive income. It's something important you have to keep. And also tax losses are allowed to carry forward in the following 12 years. This is basically the overview of the corporate income tax. Next, please. Okay. Well, the passive subject are corporation or individuals resident in Colombia. They are taxed on their worldwide income criteria. For non-resident individuals, branches or PE, they are only taxed for their national source income. Corporate rates, well, we expect a drop by from 2018 on to 33%. Right now we have in the 40, next year 37%. Free trade zone users are taxed 20% rate, and in some specific place in Colombia, 50%. For capital gains, we have a 10% rate.
And individuals would be a progressive rate up to 33 then?
Yes. Well, here's the list of the TTAs we have signed and enforced, other in negotiation and pending. We are not going in detail, just to let you know and keep in mind that we have those and what are coming. Okay, from the capital gains, as I said, is taxed at 10%. For example, or some transactions that can take this or are taxed to this rate is that sales of fixed assets held for more than 2 years. The remaining balance of the liquidation of companies after you return the capital contribution and the profits. If you have any remaining balance, can be treated as a capital gain. If your company has been set up for more than 2 years. Donations, also there are some exempt income, such as the sale of electric energy, but specific methods, solar, geothermals, or seas, or some hotel services in new hotels or expanded hotels. This is for 30 years, but the timing is finishing. The timing while you can build a new hotel or expand a new hotel is finishing next year. Ecotourism services, editorial companies of scientific or cultural content has also exempt income. From financial sector, the financing of social interest housing is one part of this is exempt. Special aspects, well, we have a tax credit for income tax paid abroad. Also, we have some tax discounts for investment in research, technological development, and innovation. Also, the 25% of the investment discount for investment in control and improvement of the environment projects, 25%. Those has a specific regulation, and you must be accredited to take this. Also, there is a discount for VAT pay on the acquisition of or importation of heavy machinery for basic industries. And this last point is quite new. It's pending the regulation. We saw a draft, but I think it's still pending some additional provisions. And this is for the affected areas by the armed conflict. We have to a progressive income tax rate for new companies set up in some areas. The government must define which areas are those, and also you can pay maximum the 50% of the income tax, and basically to finance or support specific projects that the government will regulate, but in the list will be infrastructure projects, educational programs, health and public service regarding water or electricity projects. We are still spending this, which areas in Colombia must
Sure.
be included in this program. Well, transfer pricing rules, we follow the OECD model. Something important, not only transaction with related parties from abroad, but also with entities in free trade zone users must be complied with transfer pricing rules and the formal obligations. Here are the limits for be obligated to meet formal TP transfer pricing returns. And recent changes, we incorporated the master file and the country by country report that is commonly mentioned during those days, according with BEPS.
Sure.
Next one, as I mentioned, we have a withholding tax system, and something that we like to point out here, we have withholding taxes not only for payments abroad, but also for payments between local entities or local individuals. And in the similar way, so in your left-hand side, you will find some rates where there is no double taxation agreement in force. Here, the most important is our recent tax bill changed the percentage, and for many of the concepts or the items, the maximum rate is the 15%, and also include a 5% withholding tax over dividends when they are wiring abroad.
Sure.
And for locals, well, we have. Sorry.
Yeah, and I think we can just leave this for reference. Because we would need to analyze each individual tax treaty with the country involved, right?
That's right.
Okay. So skipping ahead, can you tell us a bit about the subnational tax regarding industry and trade tax?
Okay. Yes. This is, as I said, is for subnational tax authorities. The tax basis is the revenues, the net revenue for industrial, commercial, or service activities. Rates depend on each municipality. Each municipality has released a tax code with the rates, but the range is between 0.2% to 1.3%. The submission must be bi-monthly in Bogota, or annual presentation in some of the most in the rest of the jurisdictions. And there are also a withholding tax scheme to recover in advance the tax, and in some places are monthly or bi-monthly. This is mainly what is about the industry, but we think it's important because even you are having losses, you will have to pay this tax because it's based on revenues.
Sure. And can you give us just a brief overview of these?
Financial transaction tax is the rate is 0.4%. It is deductible the 50% on the income tax return, but mainly triggers when you use resources in your bank accounts or deposits and trusts or brokers, when you transfer money to third parties, or when you withdraw money. So this is really important in the financial forecast, and you cannot avoid this. Consumption tax, it's quite for some services or foods, we have rates from the 4%, 8%, or 16%, and registration tax applies to certain acts that must be registered before the Chamber of Commerce or the Office of Public Records, such as the incorporation, increase, or reductions of capitals, or when you sell a real estate. Well, from the BIT regime, it's quite similar to the rest of the world. We have a generated and creditable, and this is the balance is what you pay. Are tax the sale of goods, the sale or transfer of right on intangible assets, provision or rendering services in Colombia or from abroad, the importation of goods. The rate, next please. The general rate is 19%. This was increased in our last tax bill. Some goods or services are taxed at 5% rate, such as agricultural goods or some electric vehicles or parts for such vehicles, prepaid medical services, among others. Export of goods or export of services in compliance with local regulation are exempt for VAT purposes. And free trade zone users that don't pay VAT when they purchase goods in the local territory. So this can be benefit for the cash flow of such entities.
Sure.
And next, there are also some goods and services a zero tax rate, some food and for basic consumption, or internet service for low-income households. I think this is mainly what we have in the taxes. Probably you will face a specific or another, but it depends the structure or the activity you carry out and the jurisdiction you choose for performing your activities.
Sure. Also, the next slide, Alex, the next part 4 is a very general overview, and again, this doesn't supplant the need to have professional advice on your specific case with your lawyers with regards to the labor side of things, as is important in all countries that you do business in. So can you give us a very quick general overview so that we do have time to answer the questions that keep piling up?
Okay, so we have some types of labor contracts. Please, next. So we have the fix. Basically, the term of the contract cannot be, well, you fix the term and but it cannot be longer than 3 years. There are another type for duration of the work. So as soon as the job hire you, or the work is finished, this labor agreement also is finished. The indefinite agreement, this has not fixed duration, and the occasional or casual, this is for certain activities, unusual activities such maintenance or repair, and is also for short periods and cannot be longer than 1 month. Okay. Next, please. Here we have some information for your references. The minimum wage for 2017 is 246 dollars per month. We have also two kinds of salaries, the ordinary and one we call integral, which is for people who earn more than 10 monthly minimum legal wage. The work day, well, the shifts. This information will be sent to you as well, so you can check this in detail. There is a comparison between some benefits that you have to pay depending on the kind of agreement or labor or salary you agree with your employee.
And we can help because I know this is a lot of information. We can help anyone that wants to see how best to structure their salaries in Colombia in conjunction with your lawyers.
Sure. Here there's the social security system, the percentage that must be paid by the employee and the employer. Please the following. I think this is useful here. Well, don't know if any comment, Bernardo, before going to the final part.
Again, the issues regarding exchange controls or exchange, like informing operations to the government and foreign investment, like the objective of this time is really to give you a really quick overview and not delve into the specifics. So please go ahead and give us kind of just that general overview.
Sure. So next. Well, here there is a flexible exchange regime. Foreign investment must be registered before the central bank, which is called Banco de la República, and it grants some rights to reinvest or to remit abroad the result of the sales of the investment, the liquidation, or even the profits. Colombian residents may obtain loans in foreign currency and also in the other way around. Branches of foreign companies cannot celebrate debt operation directly with their main office. Some restrictions. Please next. Well, when you see foreign investment, well, we have institutional funds, individual funds, portfolio investment, and the classical the foreign direct investment in companies. And that when we mention the methods, we have the direct contribution in foreign currency, or when or when you get from local currency some debts to pay the acquisition of shares in the public security market. Here's some useful information when you are a foreign investment. When you have a foreign investment when you set up, all the foreign investment must be registered before the central bank, and also it applies to additional contributions. This procedure is carried out directly before the central bank or through an authorized intermediary, depending on which method of investment you use. Commonly, when you foreign currency, it's through a financial intermediary. While you have your company or your legal entity, foreign investment must be updated annually before June 30 of each year, but only for those entities that are not obliged to report financial statement to the superintendents of companies. Substitution cancellation of the investment must be reported to the central bank, and also important if a foreign investors sell their investment in Colombia, is mandatory to submit an income tax return for this operation within the following 30 days of the transaction. I think this is pretty much of this.
Yeah, and I think we'll have to pick up the pace because we are running short of time. What would you say the most relevant issue on this slide is, Alex?
I will skip this. Probably the following. We have a regulated exchange market and a free market. The next slide will show which operation must be channeled through the regulated market. So please next. Here is the list of the transaction that must be channeled through the regulated market. So you are on this you have some forms to report to the central bank. So please, well, let us know, and also your counsel on this matter, to avoid penalties, because penalties in this regime are really high. Sometimes you will have the 100% of the transaction penalty if you are not into this if you don't comply with the law.
Sure.
Basically, and finally, I think we have compensation accounts, which mainly are bank accounts in US or in foreign currency, held by or handled by international or financial institutions abroad, and the bank holder are Colombian residents, but they opted to register this as a compensation account before the central bank. One of the benefits are that they can pay national obligation through compensation accounts. In general, national obligation must be paid in Colombian pesos through the national financial system. Those who has compensation accounts can pay this obligation abroad, direct between compensation accounts. Also has a compliance report before the central bank each month, and each quarter before the tax and custom office. So this is also important. You have obligation.
Just to interrupt, sorry. So a compensation account would be, say, a Citibank or an HSBC account that's outside of Colombia, but that's owned by the Colombian company.
Yes, that's right. We in Colombia we don't have, or the banks don't offer bank accounts in foreign currencies, just Colombian pesos. So if you are allowed to have bank accounts in a different currency, but you have to open it abroad.
Oh, okay.
I think this is mainly, we have a special exchange regime for specific branches, which are in exploration of activities with oil and gas. So the branches that render services related to hydrocarbon sector. And well, here is the list that there's some benefits, but they can receive abroad, resulting of their sales.
Okay.
And paid abroad the obligation related to their operation abroad. I think this is what we can point out about this specific regime.
Okay, thank you very much, Alex. Now, before we start our Q&A session, we would like you to answer one last brief survey question. How did you find out about this webinar? If you have comments also on what other webinars you would be interested in, that's always helpful for us. If you could just take a few minutes to reply. And if you have any additional questions, please send them in now, because we will be opening up the Q&A session. And we would like to remind you all that all the material shown in this webinar, as well as the audio, will be emailed to you so you can review it. If you have any questions, please don't hesitate to contact us. Now, let's open up that Q&A session. Alex, I think the first question that we have here, I think we just answered that. The question is, so it's not common for a company in Colombia to have an account in US dollars? I think we just answered that. So the answer would be no. If I have an employee who promotes my product and has the authority to close deals, is my company at risk of having a tax presence in Colombia?
Sure, under the permanent establishment definition, could be a risk, must be assessed.
Okay, and that's definitely not something that you want to trigger without triggering it on purpose.
Yes.
Okay. Are there different ways to structure salaries to pay less tax?
Well, I will say that that you can structure ways, I mean, totally legal, to reduce or optimize the payroll taxes or the payroll contributions. But it must be analyzed not only from a tax perspective, but also from a labor side with the council, because we have to synchronize the tax scheme with the labor rules and to be in compliance with everything and do not open risks for the employer, neither for the employee.
Sure, good recommendation. Another question we have is regarding thin capitalization rules.
Yes.
Could you give a brief overview of the thin capitalization rules applicable in Colombia?
Sure. Well, we have a thin cap rule. This is 3-to-1. This is only applied for such debts that generate interest, and the part that exceeds the 3-1 proportion are not deductible. Not the interest, not the exchange difference. Is not only with foreign related parties. It also applies to with local debts. I mean, with if you get some money from the bank, this is also included into the thin cap rule. Now with the IFRS, probably we have listened, and the structure for accounting purposes shows a debt and an interest. So also we think this can be analyzed under the thin cap rule perspective. There are some exemptions, especially for the financial sector and infrastructure, and mainly those.
Okay, and it's very similar to the rules, I would say, in Mexico, where it is, again, the 3-to-1, and it is the non-deductible interest and exchange difference. So very,
yes,
very similar there. I think those are all the questions we have time for. We will be getting back to the people that we didn't get to by email. Thank you very much once again for taking the time to answer our last survey question. And we do appreciate your joining us in this webinar, and we look forward to seeing you in new webinars. Thank you very much, and good morning.
Thank you very much.
Thank you.